This week, indentured servitude, never-ending mortgage payments threaten retirement security.
Click on the banner above to learn more about our sponsor, Fairway Independent Mortgage.
Welcome back to the Industry Leader Update. Last week, the Consumer Financial Protection Bureau proposed a new rule for homeowners who are delinquent on their mortgage or currently in forbearance. It would create a temporary COVID-19 emergency pre-foreclosure review period. The word temporary has been stretched in the last year as forbearance and foreclosure deadlines have been repeatedly extended. And that's not necessarily a bad thing, but we should be asking, what are the possible unintended consequences? One consequence could be what is in effect the indentured servitude of millions and millions of mortgage holders. Case in point, the CFPB's proposed streamline process for loan modifications could actually allow a mortgage term as long as 40 years. Yes, 40 years. Now, the question is, are millions who refinance into, let's say, a 30 or 40-year loan extending their mortgage term entering into a form of indentured servitude, especially the older homeowner? The history of indentured servitude in America began in the early 1600s as the need for cheap labor grew with the expansion of the colonies. Servants would voluntarily enter into a contract of labor without pay for a period of 4 to 7 years, that in exchange for passage to the new colonies, room and board, and also in some cases it granted them a 25-acre lot of land and provisions at the end of the contract. Now, either way, it was an agreement that was entered into voluntarily, which exchanged one's future for their present needs. Now, the COVID-19 pandemic is poised to fundamentally change how housing is obtained and financed in the United States. What impacts could we see as a result? One is more senior households continuing their mortgage payments throughout their retirement and in some cases until death. While mortgages have helped millions and millions to achieve the American dream, there are real consequences to the future economic security of countless of older homeowners that does warrant examination, and that's what we're here to do today. In effect, they could be saddled with mortgage payments for the remainder of their life, thus indentured servitude. So let's say an older couple is seriously delinquent on their mortgage that they've held for over 25 years. They've made payments for that period of time. Would a loan modification into a 30 or 40-year mortgage improve their financial security? It may not, considering the financial hardships that pushed them into delinquency in the first place. Now, what if instead the federal government did this? They added the option of a streamlined financing into a federally insured reverse mortgage loan for those that are in forbearance 62 and older. Now, that would give seniors the options of eliminating the required monthly principal and interest payments or making at-will payments of any amount that they chose. It's easy to forget that today many older homeowners are actually near retirement and still relying on job earnings as their major source of income. In fact, a Congressional Research Service report issued last November points out that the pandemic unemployment rate for those 65 and older remained higher than other age groups. Now, that's not surprising, as the report also shows that over 60% of households with a median age of 73 hold some form of debt, primarily in a mortgage, auto loan, or credit cards. These homeowners who are delinquent on their mortgage have just a handful of choices. They can sell the home and move, face foreclosure, get a loan modification into a 15, 30, or 40-year loan, or maybe refinance into a home equity conversion mortgage. Now, some have said that the reverse mortgage is the ultimate mortgage forbearance plan. It certainly may be. The challenge is, how do we reach out to those that are weighing the best option to exit forbearance? Now, what are your thoughts? Leave your comments in the comment section below. And share this video on LinkedIn or on Facebook with your friends and your other like-minded professionals. We always appreciate it when you do that. And each and every week, we have our latest edition of HECM World Weekly. It's the nation's only weekly podcast for reverse mortgage professionals. You can listen and subscribe on iTunes as well. Thank you for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis here at HECM World.